Good afternoon and welcome to a Nolan Business Solutions webinar. My name is Tom Elliott and I'm going to be covering today's webinar where we'll be going through NetSuite for IT solution providers and the order to cash process. So just a bit of going through the agenda to start with. So we'll start by raising sales orders, then fulfilling them, so delivering our goods to the customers, and then billing them, creating an invoice in NetSuite. As part of that, we'll look at an example of an approval workflow we can have where we can actually build in approving the sales orders. We'll also look at the general ledger impact and the inventory impact of all the different stages of placing an order. And then finally, we'll look at customer credits and RMAs, so that's returns within NetSuite. So now I'm going to jump into NetSuite and do a demonstration of these areas in NetSuite. Oops. So here we are in a NetSuite account. So one of the things I'm going to start with is just by showing that this is my dashboard, and on my dashboard, one of the things I've got is the KPI sector here. So for those of you that are not familiar with this, we can set up a KPI section where we can have some of the things that we want to see regularly just on our homepage. For example, we can see our expenses of this period, so the current amount of expenses that this month compared to last month. But the one of interest is the orders. So we can see at the moment there's been 7 sales orders raised this month in comparison to only 5 raised last month. So as you can see, we increased by 40%. So so now we're going to go straight into actually raising an order now. So there's 2 ways we can raise a sales order. We can raise a sales order from scratch, or we can actually convert a quote, which is another transaction in NetSuite, into a sales order. So we're doing both today, but we'll start with just creating a sales order from scratch. So I'm logged in as administrator. So for those of you on NetSuite will know, you might be administrators. So to get to create a sales order, I go through here, enter sales order. So it loads up a sales order page, and this is like the entry page for creating a sales order. So for those of you using NetSuite already, you'll be familiar with the fact that most records can be customized. So this is just a custom form in here. So I'm going to go through some of the information. So you can see here that straight away the status is pending approval. So you have a different option when you create certain transactions in NetSuite. You can have them to be pending approval. So that means that for me to actually create a transaction, once I've created a transaction, if it requires approval, the sales order will then go off to my approver, and we can confirm and set up who the approver is. And then the approver is required to actually confirm the sales order, and then they can continue the process. If the sales order is not approved, then the order cannot be fulfilled. But you obviously don't have to have approval status. It might just be that the person raising the sales order will then automatically just approve it. So actually, before I do this, I'm going to jump into a salesperson role. So let me just find that. Here we go. So I'm now logged in as a UK sales rep. So again, I can go to transactions, sales, enter sales order. So it should be the same page that loads up. So I'm going to select my customer here. So it's Fulton Supply. Here they are. It's the customer. Change the date or anything like that, but I'm leaving it today's date. As I said before, the pending approval, the status is pending approval, and you can see that the status is grayed out. Not even grayed out, sorry, it's just in line that I can't actually edit it. It's an editable field. Then go through, so I'm going to set the location. So on the location, yes, these are all different locations I have associated to the company. And I'm going to select the location as Warehouse Reading. Now that has an important impact because the items that I'm going to sell shortly, we'll sell a laptop and a laptop case. Well, obviously, once the sales order has been sent to the customer and it's been approved, which we'll go through. The next stage is actually to deliver the goods to the customer. And the location is obviously important because these goods will be stored somewhere. And I need to say, for my sales order, this is what I'm selling to the customer and this is the location. So the moment I select location Reading, and I select an item, so this is the item I want to sell. There we go. So the moment, sorry, it's not a laptop bag, it's a Dell Pro stereo headset. And you can see the availability here, it's grayed out, is 60. So I have 60 of these in stock for this location. But if I change the location to, for example, Warehouse Slough, it comes up to tell me, a warning, you have none of these available at this location. If I click on OK to accept, I've now got availability of 0. So that's why the location is important in this case. So it's Reading, got 60 in stock. So in this case, I've got the thing to show here is the cost estimate type and the basically the estimated extended cost. Now, without going into too much detail of this, how the system is set up is, in this instance, is we use an average costing for the costing of all items in stock. So the average cost per item sold of this item is £19 in this case. So it's useful in this case if I want to track how much profit I make on the sale, and we can see that as we go through the process. But that's important for the effect this will have on the inventory costing as we go through the process. So leave it as there. I'm going to sell one of them at a rate of £20. Click on add. So it completes my line. I've got 20 here. Tax code that defaults through from the item, so it's standard rate of tax I'm pulling through. So the gross amount in total is £24, £4 tax. Same again, I was going to add an extra item onto my line. So I'm going to add Dell Latitude computer. This time I'm going to sell it for £820. And if I see here, I can see that again its average costs and the estimated extended cost is 780. So in total, I'm making £40 profit on my Latitude laptop, and I'm earning £1 profit on the headset. Sorry. Now under the accounting tab, it would have calculated this information for me. And I can see the total estimated extended costs. So that's based on because my stock is stored by average, is using average costing. So that's the £19 plus the £780. So in total, my estimated gross profit based upon the sales rate and those average costs means I'm going to earn the estimated gross profit on this sale of 4.881%. Now the reason that I'm showing this is important is I've set it up that there's for an approval workflow to take place in this account, so that any sales orders that go through that have a margin or a gross profit percentage less than 5% need approval. Anything above 5% will automatically get approved. So that's just one of the examples of how you might have an approval workflow set up. So I'll leave it as it is. So you can see here, I'm not going to change anything now. So I'm only making 4.881% gross profit. So I save my sales order. And what will happen is the sales order will now be created and saved, and the status will stay as pending approval. Later on, shortly, we'll see another sales order where the status, based on the information, goes straight to pending fulfillment, meaning it's automatically been approved. The reason for that, and we'll see it on the order shortly, is that the estimated gross profit percentage is greater than 5%. And as I said, this is just an example of a workflow that you can create. So as I can see here, the status remains as pending approval. So if I log in as, if I switch back over to the administrator at this point, so my sales order is 480. So I go SO 480, so I'm just using the global search to search for that sales order. Okay, pending approval, and I have the ability to approve the sales order by clicking on the approve button. Now obviously you can set up rules for who actually will be able to approve sales orders. So in this case, although the button showed previously, if I'd actually clicked on approved in that other role, it wouldn't have approved it. You have to be an administrator in this case to be able to approve the sales order. But you can set up rules to say it goes to the user's supervisor or whoever would necessarily be the approval person. Okay, so I've created a sales order. It's been approved by someone actually having to press an approve button, and I'm now in the status pending fulfillment. So the other example is, as I mentioned at the beginning, as well as creating a sales order from scratch, you can have if you're using quote functionality in NetSuite, you can convert a quote into a sales order. So I've got a quote that I've previously created in the system, so I'm just going to find that now. So here it is, quote number 129. Customer here, you can see Murphy Consulting, and you can see it's got 2 lines on the sales order here for 45 and 985, and you can see the estimated extended costs, and it shows you per line the estimated gross profit percentage. So if I go to accounting, I can see for the overall order I'm expected to make a much higher gross profit percentage of 28.835. So if I jump back in the other role, you can do that just to show you that the status isn't changing because I'm logged in as administrator here, and it actually is related to the workflow that I've set up for the approval. So again, we'll just search for that quote. So I believe it was 129. So I can see all the information again, just make sure it's same accounting, we can see it as 28.835. So to convert a sales order, just press the sales order button. And what it will do is it will pull through all information from the quote onto the sales order. So although I've created it from the quote transaction, it is a separate transaction. That quote, you can see there, quote 129 will remain untouched. Won't have changed anything on here. But at this stage, I can change information on here. So although, for example, as I said, it pulls everything through, I could change some of the information. So for example, I could change the quantity that I'm selling them at, or I could change the sales price, or the rate as it's called here. You don't have to keep the information coming through from the quote, because obviously you might have provided a quote in 1 month and you don't actually, the sales order you then raise in the next month, and as a result of it there's increasing price that you need to change, or whatever it might be. In this instance, I'm not going to change anything. I'm going to keep it exactly as it is, and I'm going to save my sales order. Now the key thing here is you can see the status is currently pending approval. However, the sales order has now been saved and it's immediately gone to pending fulfillment. And as already explained, this is because my workflow was set up to allow anything over, let's go to the accounting tab, anything with an estimated gross profit percentage of over 5% would automatically get approved. And that's what's happened here. You can see the status is pending fulfillment, whereas on my initial sales order I created for 80, it went to pending approval, and then someone else had to go in and actually approve it. So I'm going to go back into the administrator now. So we created a couple of sales orders, one from scratch and one from the converting a quote. So if I just go to my first one that I created, 480. So the next thing I want to show is within each transaction you've created in NetSuite, you can see the GL impact of a transaction. So if I go to actions and GL impact, I can see that in total this would be the GL impact. Now I say would be the GL impact because a sales order is always a non-posting transaction in NetSuite. So the key column here is no. So you can see this transaction hasn't posted, hasn't affected the general ledger. It won't show up on any of my financial reports, my P&L, my balance sheet. No values will show up at this point. So that's the key thing really to realize, is that the sales order will always be a non-posting transaction, so it won't have any effect on stock, or it won't have anything effect on any of my financial reports. I should say actually, so if I just, so that was sales order 480. If I open 481, which is the one that we just created from the quote, you can see the created from, it always has a link across. So it was two different items that I was actually selling this time. So it was a premium Premier wireless keyboard and mouse, and it was a different Latitude Dell computer. And the reason that's important is because the quantity available will be different. So this is 480, I've got 40 of those available and 20 of those. Whereas if I go in here, I've got 60 available of the headset and 15 of the laptop. And the other thing that is also important is the estimated extended cost. So as you can see here, that's putting through the average cost. And that's because, as I said before, these items are currently in stock in our warehouse, and we're using average costing to calculate the cost of our inventory. In NetSuite, you can use other ones. Standard costing, there's FIFO, first in, first out. There's LIFO, last in, first out. But in this case, we've got average costing. And then the sales order, the second sales order, again, exactly the same average costing, but this time you can see we've got different average costs, £33 for this one and £700 for this one, which is why these average costs are much lower in comparison to the selling rates, which is why we had a much higher estimated gross profit. So everything I'm writing here is an example of where we're actually physically stocking these items. Now obviously, in some cases it may be that we sell a good to a customer that we don't have in stock, and actually we use something called drop ship, which is where we don't stock the item, we sell it to a customer, but we purchase it from the supplier once the customer buys it from us, and then the supplier delivers it directly to the customer. And so we never actually physically receive the goods. And in this instance, where there's drop ship orders in NetSuite, which will do this automatically, will do this for us, where as we create a sales order, we mark it as a dropship order, and then the purchase order automatically gets created off the back of the sales order. And in that instance, if you wanted to calculate your gross profit based off that, you wouldn't obviously be using the cost estimate type of average cost, because we wouldn't be stocking anything as inventory. In that case, we could have something called PO rate, which is the purchase order rate, where we actually track the profit base. The cost is based on how much we're buying it off the supplier for. We're not going to go into that into any more detail today, but one note, we have actually got a module called eInteract, which is an add-on for NetSuite, where we actually can automate all this, where we have a link between NetSuite and certain suppliers. So not only does it automatically create the purchase order, but the purchase order automatically gets sent to the supplier, and then the supplier will send the goods directly to the customer, and we have real-time feeds where you can see the current cost of these items. So if that's something else you're interested in, please let us know and get in touch. I think there's other we've done other webinars on that for our YouTube channel, so please have a look or get in contact if you're interested. So back to the existing order. So I'm going to use this 480 order. If I want to fulfill it, so the next stage is it's been sent to the customer. The customer's received the sales order. They've agreed to pay. The next stage is we're actually going to fulfill it. So this is where we take the goods out of our stock, and we physically send it to the customer. So if we're already on an order, which in this case we're already looking at sales order 480, we can still see here there's two options. We can fulfill it and we can bill it. Now, obviously, in certain situations, you might bill it before you, in regards to billing in this stage, I mean create the invoice before you fulfill it. In most cases, you want to sell the good to the customer. You want to actually deliver the customer, sorry, first before you create the invoice. So if I wanted to fulfill this one order, I can click on the fulfill button here. Or you can do fulfill multiple orders at once. So if I go to transactions, sales, fulfill sales order, it'll bring up a list of all sales orders that are currently awaiting in the status of waiting fulfillment, and you could do multiple at once by ticking the ones here. So it doesn't have to be a one-to-one basis. I'm not going to go through that today. I'm going to do the one-to-one basis. Before I actually fulfill it, let's look at our trial balance report so we can see the GL impact that the next two stages have. So I'm just going to go to reports, financial trial balance. Okay, so this is my trial balance as of December 2017. So the key thing here I want to look at is few accounts that are going to be affected by the next stages of the process. So stock. So currently the stock account has a value debit 126,000. Further down, my cost of sales is just 44 pence. And my sales account is 30,000. Okay. So we'll come back, revisit this once we complete the next stage of the transactions. And as I've already said, at the moment the only transaction we've created in NetSuite, the quote and the sales orders, are non-posting transactions. So back to our sales order. Now we're actually going to fulfill it. Now you can have in NetSuite, you can set up pick, pack and ship. So this means where you actually break down the fulfillment process, where you say into 3 different sections. Initially you mark the order as picked, so this would be something warehouse has actually taken the item off your shelves really. Packed, you put it in the packaging, however it's going to be, boxes, etc. And then shipped, you marked it when you've actually sent it off to the customer. In this account, it's not, we've just set it up as it's all one process. You can see the information here. It's got obviously the customer, the sales order it's created from, defaults to today's date. It's got the 2 items. The warehouse has already pulled through as Reading, because that's pulled it through from the sales order. Tells us currently how many we've got in hand. Now the remaining committed, this would be obviously, you have the potential to do part fulfillments. So if the order was for 10 and we'd previously ordered 5, then obviously remaining would say 5. In this case we're only shipping 1, and we don't actually have to ship both items at once. So we could say we're only shipping 1 of the items. I'm going to leave it as both being shipped. And yeah, I'm not going to change anything else, leave it as that, and I can save my transaction. So what this is actually doing is telling NetSuite now that we have shipped the goods to the customer. So once the item fulfillment saves, we can now see our on-hand quantity of both the items has decreased. We now only have 59 of the headset, and we have 14 of the Latitude computer. Now, because we told the system we've shipped the goods to the customer, the items have been taken out of stock within NetSuite. So if we go back to our trial balance account, actually before we do that, let's look at, as I said before, every transaction, or most transactions will have a GL impact, whether or not it's posting or not. And as you can see here, the stock, because it's actually, we're telling the system we physically shipped something, it's going to have an impact on stock because we've taken something out of stock. There's 2 lines because there is 2 items have been sold, 2 different items have been sold. And for both of them, we've debited a certain amount from cost of sales and we've credited stock. So if we went to our trial balance, we can close that sales order, go back to our trial balance, and if we take the stock line first, it was 126001. If we refresh it and we find stock again, There we go. Stock value has decreased because at the moment we've debited stock because we've taken items out of stock. Sorry, we've credited stock because we've taken items out. So our debit value of stock has decreased. Okay, and if we went to cost of goods sold, that word has increased because we've debited that account. Now, where do these accounts come from? That's important. So if we return to our item fulfillment record and open up one of the item records, so I'll just do the headset. Now, every item in NetSuite, obviously you can have multiple different types of items. So this is an inventory item. We physically stock this item. And you can see the costing method average, which is what I've talked about already. The average cost, so that's that £19 that was shown on my sales order, and the total value of all the stock. Under the accounting tab, we set what's the cost of goods sold account, what's the asset account, and what's the income account. And then because our item fulfillment process is taking, sorry, I pressed the wrong button there. If we go to actions, GeoImpact, because the item fulfillment's taken items out of stock, we've debited the cost of sales and we've credited stock based upon the cost of goods sold account there and the asset account set there. So I return to my trial balance, sorry, not my trial balance, my item fulfillment. I could then bill the order directly from the item fulfillment, or if I went back to my sales order, the status of it is now, it was previously pending fulfillment, it's now pending billing because we've actually physically, we told the system we physically sent stock. My related records, I'll have my item fulfillment record, status of shipped. So now from here, and again, I should say you can do transaction sales, bill sales orders, similar to the fulfilling sales order page, which will bring up a list of all the sales orders ready to be billed, so invoices raised. So just while that's loading, I'll go back to my sales order. In this case, I'm going to click on next bill. That's just loaded up. So again, these are all the sales orders in the position where they're ready to be invoiced. So as before, when I mentioned when we converted the quote into a sales order, same concept here. We converting our sales order into quote, sorry, a sales order into invoice. The sales order record remains untouched. All that happen is it will have another related record of an invoice, but all information is pulled through, apart from obviously defaults to today's date. It pulls through the location, it pulls through the two items, and again, before it's a new record in NetSuite, so you could change the information. If the unit price has changed, for example, I could update it here. I'm not going to, but you have the ability to do that. It is a brand new record in NetSuite, but it does pull all the information through from the sales order. And I save my sales or save my invoice. Okay, just waiting for that to save. Okay, so there's my invoice. It's open, which basically we turn the system that we've raised an invoice. We would have sent it to the customer. However that would be, we can automatically have it set up via email. We could print it off and send it in the post. But then at this point, again, we can do actions GeoImpact, and that will tell you the GeoImpact of this transaction. So what it's done here is again two different sales lines. So that's the £20 and 820. So that's affecting 4,000 sales. And if we go back to item, that's because of the income account there on this item is set as sales. It's debiting the total amount to accounts receivable. So the customer has not yet paid us the £1,000. So the customer owes us that money. And obviously we've got a VAT element and it posts the VAT account set up. So that's why the sales as the invoice is open, because the customers get to pay us. Okay. So yeah, so this time in total we've credited the sales account of £840. So if we go back to our trial balance, sales was 30,000, so that should increase by 840. And we go back and we see it has there. And one of the good things is in NetSuite, you can drill through on reports to see what it's actually made up of. So if I click on the actual number and drill through, so because this is doing the whole year, it's going from January. But if I go all the way down to December, sorry, not December, we're in August, aren't we? Still 4 months away. I can see that the total 20 and £820 there is just come from the invoice number 851, which is this invoice that we've just created here. There we go. So that's the process through from creating a sales order, then we actually fulfilling the goods and sending them to the customer, and then actually raising an invoice to the customer. And all the way, or along the way there, we've seen how each different stage affects the inventory impact and also the GL impact, so it affects my reports or my financial figures. So it may be that a case where from time to time, for whatever reason, a customer is going to return a good to you. So it might be that they've received a laptop and in transit it's broken, or something's happened, or it was delivered faulty, or whatever it may be. Obviously there is a return process in NetSuite. So you'll be able to see already from this invoice, I have a button at the top of the invoice where I can say authorize return. So if I click on one of these buttons, click on this button, what it will do is it creates a new record in NetSuite, which is a return authorization record. So return authorization form, which is what we've got here, may also be known as a return materials authorization, which is what RMA stands for, which is what we had on the agenda. It's basically creating a record where we tell NetSuite what we're expecting to receive as a return from the customer. So we're not telling the system we've received the return. We are not creating any credits or anything against the customer. We're just telling the system what we're expecting to receive, because the customer would have rung us or emailed us to say we're returning this good because it was broken or something like that. So it holds information about the items being returned, and it also tracks the price of items being returned. And it's important because that will determine the amount to be credited or refunded to the customer. So because I've created it from the invoice, it will pull through both items on the invoice. Now obviously it's not necessarily that both goods are faulty or are being returned for whatever reason. So in this case I could say that they received both. The invoice has been raised for both, but actually the Latitude computer is fine, but the headset's faulty. So from here, I can remove the headset. Sorry, leave the headset and remove the Latitude computer. So now they're only returning one of these. Before I click save, few important things here. You can have an approval status. Sorry, again, you have an approval status, and you can have a approval process. So it may just be that whoever's only one person has the ability to create return authorizations, and they don't need to be approved by anyone else. So you'd set the default status to pending receipt. Or it may be that multiple people can set them up, and their manager or whoever it is actually needs to approve return authorizations. So which says you'd have an approval workflow set up, and it would go to pending approval initially, and then only the manager or whoever would be need to actually approve it. I'm going to go to pending receipt. In this stage, I haven't set any approval process, but I have the ability to actually authorize any returns. So the return authorization is a non-posting transaction, like a sales order. So it's not going to have any impact on stock or any impact on any of my GL accounts. There's two different ways, two different returns we can do. There's basically, so under custom form here, so for those of you using NetSuite, you may be aware that you can have custom forms for each transaction, and a custom form will change the layout of the fields you've got here. You can have certain fields made mandatory, you can hide certain fields. But in the return authorization process, there's actually important difference as well. So this is the custom one, but you'll see basically there's two different ones here. There's a standard return authorization cash and there's credit. So if a credit form is used, this will generate a credit memo for a returned item, and then the credit memo can either be applied to account balance or refunded to the customer. So it could just be, say, in this case, we don't actually want to give the customer back £20. We'll just add create a credit memo, and that will just be applied to the customer so that next time they make an order raise an order with us, then obviously there'll already be £20 in credit, so they owe us less money. Or if it's a cash, a return using this form generates a refund for the returned item. And basically a cash form cannot be converted to a credit memo at a later stage. Whereas a credit memo, as I already said, can either be applied to an account balance or refunded to the customer. So you have two options with that. I'm going to leave it as a credit here. So I'm going to save the return authorization. Pending receipt. I didn't have any approval status in here. And again, I can do actions, GL impact. So open that up in a new tab. And the posting is no here. So it's going to have no impact on my trial balance report. Just going to go back to the summary there. Close that page. So the next stage would actually be to actually receive the goods. So this is the customer sent back our headset. They've delivered it back to us and it's been received, and we're actually now telling the system we've received it. So it's going to default to our Reading location, a warehouse in Reading, but again we could pick a different location if for whatever reason we're going to do that. I'm going to leave it as it is. Pending, it creates an item receipt transaction, which is the same really as if we're actually, an item receipt would normally be used in NetSuite. The other place you'd see it is if you actually buy a good from a supplier, and an item receipt would be once the supplier's provided it to you, it's where you're actually putting it into stock. And it is the same process as that really, except for we're returning it back into stock because the customer sent it back to us. We do have an option to select whether or not we're going to restock it, because if it's faulty, we might not actually want to restock it. But if the customer is returning it because they decided they no longer want it, and you have a 14-day return policy, as long as they haven't affected it, they haven't damaged it or opened it or something, in this case we would want to restock it. So I'm going to run it as if we do want to restock it. You can have landed costs. I'm not going to go into detail of that in this within this webinar, but landed costs would be if the cost of delivery or other areas actually affect the cost of the goods in stock, then you can apply landed costs. We're not going to go through that today, but that's why that's there. I'm not going to change anything. I'm receiving one of those and I'm going to put it back into stock for me in the warehouse Reading. So I save the item receipt, and that is told NetSuite now that that item's back in stock. So you can see that on hand has increased to 60. My GL impact of my item receipt will be debit stock and credit cost of sales. It's the opposite of the item fulfillment transaction. So my trial balance, if I find stock again, it was 202 at the end there. I refreshed that, refreshed my report. It's now 212, where it's increased by the £19 from that item receipt. And then the final thing we would do, we go back to our return authorizations, and we now click on refund. And what that would do is it create a credit memo. So this is where we're saying we owe the customer £20. Pulls through all the information again. And then you have an option here to apply it. So you can apply it against an existing transaction. So you can create standalone credit memos for whatever reason where you're creating a credit against the customer. Or you can say it actually applies to one of our transactions that's open with them. Because at the moment they haven't paid either of these. So in this case it is, well, let's see, sorry if I just forgotten the invoice number. So we're doing it from invoice 851. yes, so that's the £20. In total, they still owe us £1,008 related to it. So we do our credit memo and we can say reduce the amount they owe us from invoice 851. And in theory, it accepts a payment of £24 from it. So if I now save my credit memo, a credit memo is fully applied because the full £24 have been applied against an invoice. My GL impact would be credit accounts receivable £24 because the customer owes us £24 left, and we debit 20 to sales, 4 to VAT on the sales. And now back to my invoice, I refresh it. It's still open, but in theory now, if I go to accept payment, actually, sorry, I didn't even need to go through to that. You can see, if I just go back, on the invoice itself, the total is 1,008, but the amount due is only 984 because the £24 has been of the credit memo has been applied against this invoice, saying they only owe us £984. So that's where the credit memo has been applied against the transaction. So as I went on the accept payment page, we're not going to go through into payments in NetSuite, but if they were to actually pay us, they only now owe us £984, rather, specifically if this invoice, rather than the 1,008, because we've already credited their account of £24. Okay. So I'm just going to jump back to my PowerPoint here. So that's the thing I was going to show in NetSuite. If anyone's got any questions, I'll stay on the line for a few minutes and try and answer any questions now. If you have any questions at a later stage, please email them through to sales@nolanbusinesssolutions.com, or you can call us on the number below. If there's no questions, I thank you all very much for listening. I hope this has been useful. Any questions at all relating to NetSuite, anything you've seen today or anything else, please get in contact with us. The details below. And thank you very much for listening to this afternoon's webinar.